Okay, again, let's go right to the good morning, everybody. First of all, audio check, video check, everything good, guys? Good morning, Kyle. Thank you, Randy. Okay, so let's get started with, let's remove all this and look at the bigger picture. Okay, so what's going on here? First thing that I see is that we are one time into the upside. See how we have higher low each time? So the first thing that I need to know in order to think that we're going to move lower is we have to first trade below prior day's low. Now, as usual, there's always a chance that we could just trade below prior day's low and have one of these long liquidation days, right? Um, Unlikely. The more likely pattern we are to have is the same thing we've had the last couple of days. Even if we break lower, we're likely to examine price lower. And you see this huge unauctioned area down here. Well, the bottom of that huge unauctioned area is 1955, roughly 25 to 30 points away. And so my guess is that we'll end up with something that looks like this at the end of the day, like we have pretty much every other day. As a matter of fact, every other day it's pretty much look like that, more than this, all right? So I expect the range to be 25 to 30 points in range, meaning those are going to be the primary extensions for a move, lower. Let's see here real quick. Let's erase all this. Okay, so there's an open gap sitting right here, highly unauctioned in between, and price wise, actually not highly unauctioned, there's no such thing, it's simply unauctioned. Okay, and please refer to the 5-minute bar chart to make sure that's the close, but approximately 1943 from where we're trading right now at 1979. This is roughly a 37-point stretch. I expect responsive buyers. I can tell you I'll be a responsive buyer in that area, and my trade plan there calls for me for taking half size double stop, meaning a point stop for a swing back to the upside. Okay, so 1943. We'll cover the middle section in just a moment. Again, I expect responsive buyers first time towards 1955 for a move back to the upside. Remember, this is all integrated into, do we have tick divergence? Do we have divergence in the 5-minute chart? Do we have a swing long or swing short? Giving us a bit of a heads up, right? So obviously, in order to get any kind of sustained downside, we have to trade below 1967. Until trading below 1967 happens, assume that there'll be responsive buyers on the way back up each and every time. And we're just consolidating um, and balancing for a move higher. So as it is, we are gapping down. Generally speaking, when we gap out of balance, when we move out of balance, we tend to gap and go. So we don't have a gap and go this morning. Doesn't mean it can't happen. And let me check econ real quick to make sure I'm not off on that. I don't know how that coming up. Ah, there it is. So on the economic front, we have 9 a.m. We have absolutely nothing. We have no econ. Let me verify that. Ah, that's because it is the 8th. There we go. Still have no econ at 9 a.m. 9:30 is the last thing. There's natural gas, which leads me even. Oh, you know what? Today is October 8th. FOMC, guys, this afternoon. So heads up on that. FOMC minutes at 1 o'clock. That's an automatic no speaking for me. And then very big in the last half hour. If you were trading the last half hour today, FOMC member Williams speaks with 30 minutes left to go in the market. So if the normal end of day super high out of control volatility is enough for you, throw a little bit more gasoline on the fire. We will have FOMC members speaking at that time, please note. And then also, additionally, um, outside of FOMC meeting minutes, Bank of England Governor Carney speaks at 1 o'clock. Hasn't affected the U.S. markets too much, but you never know. And then at 12 o'clock, we have the 30-year bond auction. That can affect the market, guys. Bonds have been pretty volatile the last couple of days. So heads up on the 30-year bond auction. A lot of econ in the afternoon, pretty much nothing in the AM. Okay, so looking above the balance area, So we can definitely have a delayed reaction in the afternoon that can drive us out of this balance area. Is the first thing I put in my notes. Obviously, we want to know what do we have above yesterday's high. So looking above yesterday's high, the thing that's most prominent, that's the last FOMC meeting spike right there to 2011. So a couple of things. We've gone from swing to swing and meeting to meeting. Notice if we don't make it back up to 2011, that's a distinctive lower high, and that opens us up for a move back to the downside. Please have in your notes additionally 50-60 retrace. There's two 50-60s that we're interested in. 50-60 retrace from recent swing low to current swing high is sitting right there at 1926 and a quarter to 1910. Both of those are important areas. Also 1914 to 1916 in between there is pretty important, specifically this high volume area on the volume profile. And then from where we began this rally, which was on Friday morning, that was the swing low. This is the 50-60 for that now. The 50 sitting at 1937. Notice that's just below the open gap, right? Hence why we probably will need an 8-point stop in case we come test the top of that. And then notice that the 62 retrace from Friday's swing low is right at the 50 retrace from our true swing low back at 1860. It makes this area very important and highly likely that the computers, computer algos and traders will respond out of this 1926. I'm very interested in looking for a long in this area. If I were fishing and I were going to trade FOMC, which I'm not, I would look to take a long out of this area for certain. If we were able to stretch all the way down to that area, I'd be very interested in looking for a long there. So please have that in your notes. Again, I won't be involved at that time, so I'm very focused on just taking the money out from where I have the true edge and not worrying about everything else. Okay, so in between here, the other natural area to worry about is 2000. I think we have a zone from 1999 3/4 to 2001 and a quarter. I'd expect first time into that area, rejection in that area, and then from there it's a pretty easy trip up to that 2009, 2011 and a quarter. So that's 30 points from yesterday's close was 1987. We're opening at 1980. 2011 puts us 30 up. It is always possible that we have some kind of crazy update based on what the Fed says. I'm not going to worry about it too much. Specifically looking at areas above, there is still an untouched open gap at approximately, and again, you have to confirm this, 2016 and maybe 2015 3/4. This is different than the CME settlement close. So please go and verify. Obviously, the top of that day's range is 2055 if it really got crazy. And there's the place where we just get into that big chunk of volume is right there at 2029. Okay, but I'm not going to worry about all that. That's way too out there for me to even worry about. The only way we'll get there is during the FOMC, and I won't be trading that. So there it is for your notes. This is pretty much poorly auctioned starting from 2021 to 2029. So I'd expect initial rejection off of 2021, re-auction that through our normal patterns, and reject that back at the back at 2029 to 2032, somewhere in that area for a rotation back down. And if they really get stretched, and then finally, if it really just gets insane, 2063, there's an open gap somewhere in that area. Again, verifying the 5-minute what the open gap is. My trade plan is quite simple. Yesterday, if you keyed off the 10s, I was really spot on the scalps, although my own personal execution was awful. I plan to improve that today, but I don't have to change much in terms of the scalps. And then focus on the swing long. So let's, instead of looking at the chart, let's look at what worked yesterday really quick, and then we'll just switch our focus to today. But my trade plan pretty much focuses on once we're up or down pre-FOMC, plus or minus 20 intraday, focusing on looking for swings in those areas, and the rest of the time just scalping first touch of zones, right? And then looking for what I'm referring to as floating zones, which I was calling out yesterday. Those are my scalping points, and I'll continue to call those out as the day develops, and looking for tick divergence in the 1-minute chart, along with divergence in the 5-minute swing indicator. Let's look at what worked yesterday. It was a bit of a tricky day. First thing to note, clearly balanced day, right? What was our clue that we could have balance? And the first clue to that was, and this is a great example, what didn't happen? We didn't get below, um, wow, I was totally off on that chart, wasn't I? We didn't get below Tuesday's low. I labeled as Monday, but that's Tuesday's low. We could not get below yesterday's low. So in this drive down, what's the stretch? Well, we go from 1992 all the way down to 1960, let's call it 1967, right? So 92, 70 to 70 is 22 points. 67 puts us at roughly a 25-point rotation. I've been saying 25 to 30, that's pretty damn close for a swing long location, right? And that's exactly what we had. Pointed out, obviously, we got the swing long, 50-60 retrace right into here, gave you the launch, a second 50-60 retrace, and then the upside, my original upside target was 1978, and then obviously areas above, we just continue to stretch up into that, and there were several scalps to be had in this area. This is just balance, and until we break out and get below this low from 1955, I'm going to assume balance. I'm going to assume that we're going to end up having a lot of days that look like this. Now, what changes that again is if we get over 1992 and hold above 1992, well, then we have room to come up and explore all these levels above. I would expect responsive sellers, again, assuming the open at 1980, when we get to 2000, 2006, 08, and then 11 to 13, all of these are key areas for rejection back to the downside, right? And I think I have those same areas above today. Let me go see what I was 11. I didn't put 06 there. Let me go see what I saw at 06 that I didn't want to repeat. Hold on one second here. Okay, we actually have to adjust this a little bit, I think. Hold on a second here. Ah, that's why I'm off. Okay. Okay, so this is FOMC swing high right here. And actually, I want a zone. Have we not been back since then? We have not. Okay, I gotta make a little adjustment here. Hold on a sec. I lost it. There it is. And here's the last time we were up. Current swing high. Okay, I had 2000, but I actually want to bump that a little bit here, guys. So I want to adjust this zone. I want it back like, actually I don't. I'm fine with it right where it's at. 2000, 2002. And then I want a zone at, I want a single pointed zone at approximately 0550. Okay. Notice this whole thing is poorly auctioned, but we still can get a response over here. Well, if I can pick a color that'll work. Let's try this. That's red. Wrong color. There we go. So, and then notice how badly this is auctioned all the way through here. All right, so let's get the bigger pic. Let's go to a bigger picture here so everyone can see this. Okay, FOMC high, prior spike high, right? So notice this whole thing in here, everything above 1991 is poorly auctioned in here, right? So let's switch back to 5-minute. We know that everything from FOMC high down to 1991 is poorly auctioned, so please put that in your notes. What does that mean for us? That means in these areas that we need quick reaction out of these zones, or we stand a good chance of having a trend day up through this area. It also so happens that with FOMC, it'd be very easy for the market to push through this area with almost no resistance. Okay, so notice a large area that you can put 1995 is a zone, but I don't have anything strong there. 1995, 1997, but I do expect to be able to auction above 1991 pretty easily, therefore I did not put a zone there. Okay, and then of course we may end up with floating zones inside this area if and when we get up into that area. Okay, the other thing to note that we're in, you'll notice I put these are valid from underneath only. I don't want to be going long. I do not want to go long these zones on the way down. They've been tested from above. I want to, what would have been preferable is if we opened, say, 1975, then I would have looked for rejection at each of these areas as they move up. But from above, really the first area of support that I really want to bank on is Globex low, and more importantly, Wednesday's low. I want to see some structure develop. I want to see some structure develop on the way down so that when we get above, it'll act as support when it comes back and tests on the backside for scalps. And then again, above here, I'm going to be very cautious. The other thing we want to look for from yesterday is NQ and ES balanced. If they're not, caution, right? You saw yesterday, it was very hard in here. ES kept driving for no reason. Well, I'm not going to say no reason, no identifiable reason, right? And NQ was completely just sideways, unable to participate. We want to see if NQ and ES is aligned. Also notice yesterday afternoon, I did not get bearish in here because NQ and ES were in alignment and NQ was behaving just fine. It wasn't behaving like it was the end of the world. So we're getting a bit of weird openings. I imagine today I'm cautious for chop in front of the FOMC, and I'm just going to let things develop over the first 30 minutes and then look for my trades as they move along. So that's really that is the plan. There's no question in my mind. That is my plan. And any questions about that? Okay, 3 minutes to open. Hopefully I was brief enough. Let's have a great day. Remember, follow your rules. If you get stopped, have a maximum stop for the day, guys. Key in surviving. Number 2, proper stop. Oddly enough, I'm getting more and more confident in using larger stops, not smaller stops. That's just me personally, but proper stop, guys, really important. Let the trade come to us. Wait for the rotation sizes. We saw yesterday, the rotations can be very large and very wide. Let them get stretched out. Catch people when they're off guard and they're panicking. Don't put yourself in a position where you have to panic. And let's just continue. We've really been on a good string of days. The only area I've been struggling in is actually executing my own trade calls, and I plan to improve on that today. I don't see anyone with any questions, so I'm going to put it and this.